Do you all remember the videos and images of excited and eager buyers that lined the streets of major cities like New York and Boston to view open houses this past spring? Unbeknownst to those anxious home buyers, the record-breaking housing boom that had consumed the United States was well into its final days. Economists at that time had already started to predict that the record-breaking housing market would soon be entering into a period that would quickly shift in that the Federal Reserve would be raising interest rates. At that time, in those early spring months of 2022, the mortgage rates had already made a large increase from the 3.2% in January to a whopping 4% at the end of March. But that's nothing compared to where it is today. Those early spring high interest rates were a big factor in slowing down the once-in-a-lifetime housing bubble that was going on during the COVID pandemic. Unfortunately, that housing boom, which most of us were complaining about, is now being replaced with what Federal Reserve Chairman Jerome Powell is now calling a difficult correction. The Federal Reserve Chairman goes on to say that for the longer term, what we need is supply and demand to get better aligned so that the housing prices go up at a reasonable level and at a reasonable pace, at that people can afford houses again. The housing market will have to go through a correction to get back to that place. The Federal Reserve Chairman believes that his housing adjustment that the government is trying to force is likely to help the real estate market be better balanced. This unfortunate news is not at all what home buyers, real estate agents, mortgage brokers, and home builders want to hear. And this correction in the real estate market is just getting started. This dramatic change in the housing market, which is shocking the United States and the world, continues to advance. This past Monday, 30-year home mortgage rates skyrocketed to the largest 12-month jump since 1981. The mortgage rates are now standing at 6.87%. The United States has not seen that high of a mortgage rate in 20 years. We have seen in the past that when the Federal Reserve puts up its defenses and turns into an inflation-fighting monster, real estate-related business like real estate sales, construction, home builders, lenders, and title companies can face an unforgiving challenge. There will be many new home buyers who have recently entered into the market that will lose their ability to buy a home. Lenders have a very strict debt-to-income ratio standard, and with the rising interest rates, those new buyers who were already cutting it close will be cut out of the market altogether. High interest rates can also affect home buyers in another way. If you are a new home buyer last January at 3.2% interest rate and you were in the $500,000 purchase price, your mortgage would have been approximately $2,162 per month. With today's interest rates at 6.8%, that same home buyer would be looking at a monthly payment of $3,260 per month. Their buying power will have been dramatically reduced after this past Monday's interest rate hike. The goal of the Federal Reserve is to bring the housing market to a better equilibrium. Most economists believe that this dramatic rise in interest rates will cause the previous low level of real estate inventory to rise and the price of new homes to fall across the country. The previous high number of home buyers will exit the market as new sellers continue to enter the market, bringing the equilibrium between home buyers and sellers back into a place of equilibrium. But the big question is, how far will home prices drop? Home price declines have started to happen already in areas like Austin, Texas, and Las Vegas, but it has not affected the entire country yet. Zillow recently reported that in 500 plus housing markets across the US, prices have remained neutral, and in some places, home prices have even increased. Zillow reported that in only 117 markets did they see a decline between May and August. But those numbers were reported well before the recent interest rate increase of 6.87%. Real estate experts are predicting that soon there will be more housing markets that will have decreases in home prices. There is no doubt that as long as mortgage rates stay around the upper 6 to 7% range, the entire world will feel the pressure of declining home prices. There is some good news for new home buyers. Redfin, a tech real estate brokerage, reported that their real estate agents nationally faced competition only 44.6% of the time in August. Redfin reports that that is their lowest bidding war rate in 2 years. 1 year ago, their bidding rate was at a whopping 63%, and the bidding war rate has declined for 7 straight months. 1 year ago, the typical home for sale on the market was receiving 5 offers. This past August, Redfin reported that the typical number of offers on a home is down to 3.2 offers. For those that are still in the market to buy a home, this is fantastic news. As the market continues to slow down and new home buyers continue to drop completely out of the new home buying market, buyers will have a much easier time getting their offers accepted. That's it for this video. Please comment below and subscribe. I'll see you on the next video.